welcome. And you see we're in sunny California here, and we're just laying back, having a good time, enjoying the weather. Are you enjoying the weather where you're at? Welcome to the National Real Estate Cafe with Don and Gino Franti for your daily dose of real estate market updates. And today we go over some really interesting new data.
Yes.
Love new data.
Yeah, so we've been talking about how housing prices have been increasing on a steady basis for the last few years, and in certain areas double digit, especially the places that were most hit by the recession or the big, whatever they call it.
Great Depression. The Great Recession. That's what they call it.
All right, so let's share with you what areas that the home prices are growing most.
Okay. I have a theory behind this. Why don't you go ahead and go through the numbers, and then I'll tell you what my theory is, Don.
Well, I'll start with the red, because they're like, wait a minute. I thought all the home prices were going up.
How is stealing my thunder? But
oh, okay, you want to go there?
Go for it. Go for it.
I didn't know you were going to go there.
It's okay. As you can see, these are unrehearsed, folks.
Okay, so I'll go on with the other. I'll let you go in the red. You're used to it.
Oh.
So, okay, the home price has gone up in the $250,000 to $1 million range. You can tell that they're pretty much double digit across the board year over year. And the number that brings it down naturally is due to the smaller number. So the number one most growth is 500 to 750,000. I bet a lot of areas across the nation are surprised. That's like a San Francisco, San Diego, Los Angeles, New York, some of the bigger markets.
Okay, so the thing that I want to talk about is these two that are in red. Not only is it interesting that we actually have properties going down in value, but it's also interesting that where they're at, right? So 0 to 100K, there's not a lot of inventory. There's not a lot of distressed homes in that market. From 100 to 250, you're talking about now that's a one-bedroom condo here in Los Angeles. That's not a very desirable property. It's not good enough for a family. So these are less desirable properties. They were popular when there was no other choice because investors would pick those properties up. But this also tells us that investors are not buying the very low bottom properties anymore. Now, most importantly, and this is going to be controversial, look at that, right smack in the middle, 500 to 750. This shows growth of the upper middle class in the United States.
That's right. That's called jobs, ladies and gentlemen. People feeling comfortable about their jobs and some wage growth, but it's very minimal. But in the upper stage, there is some wage growth. In the lower levels, not as much, and that's why you're hearing about no wage growth. But in the higher levels, the executives are starting to get paid more, again, because there's been some profits with a lot more companies now and stuff. So that's good news. Again, what's weird is that chart, those numbers change. Believe it or not, the 100 to 250 used to be the hot spot, and now it's in the negative. So it's going to continue to grow, right, Gino?
Yeah, and in fact, obviously it's more difficult to find those properties. But remember, those might be the properties that may just be unattractive. So look at those for investment opportunities, folks.
They don't appreciate you calling them unattractive.
Well, that's okay. They're houses. They don't have feelings. The termites there, Mike.
Well, we have feelings about the housing market on a daily basis, so make sure you tune in. And you can get these sent to your phone by texting NREC to the number 58885. Please like our Facebook page, the National Real Estate Cafe. Thanks for joining us.